looking for a pause before the next leg up into the year end, then taking profits if Gary's game plan works from here. Good morning, Gary. How are you?
Pretty good.
I'm happy to see the market's powered ahead. It's going sort of as you laid out, and we'll see in the indices as we scroll through them that some of the targets you had, and you can tell us where they're coming up to. So overall, is this working how you thought, or what are your thoughts and feelings of where the market is right now?
Yeah, considering we've probably had an underwhelming year in terms of the cycles, there we've probably been we've been reacting at the right times, but we've probably underperformed previous cycles. So in terms of because this is a pretty bullish cycle out of that October midterm year. So although it's been a pretty good move out of that October midterm year low, and also the high low in the March sort of following year, it still has been underperforming most of the previous cycles. So normally this is like a super bullish. Like this is normally like the best 14 months of the 4-year cycle. So we're in the last month of that best 14 months cycle of the 4 years. So that sort of gives you an indication there. So which I guess
catching up to do we in a month?
Yeah, we're a little bit behind there. So I think the Dow Jones is up 29% from that low. It's funny, I actually had a 29% drop as well into that low, but that was probably a couple of days ago now. So it might be sort of maybe we're 31% up here now. But the average is 49% to get to the end of this year. So we are lagging a bit, but still pretty positive there. And we know when you do look at typically markets sort of winding up, they build first and then they start to run, and then the final stages can be where the real joy, if you're long, sort of comes in, So so we're in the joy state and phase. So this is when you can get the bigger gains here. So but yeah, considering we've probably underperformed the whole year really, in terms of previous cycles there, it is nice to sort of see it move here, but we just need to sort of see what happens in next year. I still think we'll run into probably the first or second week of January. I'd be getting a little cautious up there depending on how high we get here, but it looks pretty bullish. You're not showing too much weakness there. A lot of people will tend to sort of think here, and I saw his name Mike Webster, who used to be Investors Business Australia. There used to be one of the sort of head portfolio managers there. He's bit of a gun. He was talking about this being not the super cycle there, but like a power trend, which basically means that once it sort of has a certain performance in a short period of time, that those markets can really kick on. And a lot of people were calling for this to have a bit of a pause under the high. And he's like, these power trends don't often do that. So, and he's been spot on. So it's just sort of kept going here. Some good traders have been calling for a pause here. So sometimes the last moves here can be really powerful. So, it did look like we might get a little pause there. I thought we might get maybe a 3-day pause there, because we're getting pretty hot there last Friday. I thought we might see like a 2 or 3 day pause on our market or even the US market there. But I think any sort of pauses there might just be short term, Chris. So, but S&P, I think we'll go back and test that 4,800 zone there. I think that looks like I'd actually like to see it pull up short of it. So not go to a new high. They would pull back, maybe build a handle over the first half of next year, and then we start to sort of power through the second half there. That would be more bullish sort of set up long term. So I like to see markets get a new high and then sort of fail. Then that can kind of mean deeper lows and stuff there. Oftentimes you want to see things more controlled rather than too erratic here.
Well, that's the indices. Is there anything different? You touched on most of them on the NASDAQ, or it's pretty much the same sort of thing. You're looking for this sort of target area, ideally under the high, build a bit of a handle, and then look to power on. Is that same sort of outlook?
Yes, I was looking at, there was probably like a lot of markets will go back to the first lower high on the way down. So sort of I saw that first lower low. So that 15,000 zone there was like off from the peak there, made a first low there. So markets often will go back to that first low off the peak. Yeah, that zone there. So that's often, I know McLaren talks about it all the time, that's the best of the level just to keep an eye on. But we've sort of gotten there pretty quickly, pretty early here. So considering how buoyant, how bullish, and, really only had that 1 week sort of pause there so far. It's pretty robust there. So, there's no reason why we can't get to 16,000 or near that by year end there. So, again, I'd like to see the whole thing pull up just under the high. But yeah, we'll see how we go. But look at this stage here, the whole thing looks pretty buoyant here. And definitely getting an improvement in sort of market breadth as well. So the first sort of stages of that sort of bullish phase out of that October low there, little flag there. First couple of weeks there, it's probably driven by probably the same old stocks. But as we sort of broke out there, we started to see other stocks get involved. And then since then, we're seeing lots of stocks get involved. And it's kind of same as our market as well. So, those are good signs that will. So the key here is actually big caps have had a big move already. So probably most of the gains have already done there. Starting to see some of these mid caps sort of move. So seeing like we've covered like S32, IGO, PLS, AKE, those sort of stocks here in the last sort of month there. And even some of those property trust stocks as well. We covered that probably a month ago as well, being underwater there. And even healthcare as well. So that they're all starting to bounce here and recover. So they can sort of can move and get a bit further here. Whereas you look at, the banks are all sort of run pretty hot. They're probably top of the band here. And CDA at 110 is getting, forecast earnings for next year is like -6%. Forecast earnings for 25 is -3. So banks aren't
excited about that.
Yeah, next couple of years. So they're getting pretty pricey up here for a segment which is not going to grow. So I know the yield's obviously nice, but yeah. So Macquarie's probably the only one in there that's got a bit of more growth element there. But yeah, they probably run their race. You're starting to see the mid caps move here. Once we start to see some of these smalls start to move, I noticed today Airtasker was sort of back 20 here, and there's a few other smalls that have been languishing. So once they start to sort of get going here and get a bit hot, everyone's starting to, once everyone turns pretty bullish here, small caps, that probably will be the time to cut and run. So, but yeah, I think we're a little bit away from there. I think some of these mid caps have definitely got some room to run here. Some of the growth stocks, as you say, like 360 there, measure highlighted there, that's come back as hell and tight here. So I think 360, 0, MP1, which were kind of led out of that October low. They've been languishing here while the rest of the market's sort of been, powering on. So maybe there's some move in some of those stocks as well. So, yeah, still quite a few stocks here that I think can still have a bit of a run here. So just got to basically pick the right stocks here. That's going to be the key there. Yeah.
Just on, you were saying the small caps, once they've started to run, we know that the markets are light. Going back to a couple of weeks and months ago, you were talking about from the inflationary research that you've done, and definitely got a whole video on that, link to that at the end. In your research, you found that in the 40s and 70s, the small and mid caps tended to underperform for quite a long period of time, while inflation was still a large part of what was driving the economic movements at the time. Would you see this as more of a shorter term? If the smaller mid caps come in, it's more of an indication of how hot the market's getting, as opposed to a large transition of them taking the leadership, or yet to be seen the cycles?
Yeah, good question, Chris. Yeah, so I mean, like obviously we've underperformed 3 years small caps, which is dead set in line with inflationary periods of the past. So yeah, I think this is just short term. So really just the normal sort of market cycle that is big caps, mid caps, smalls, peak, bearish phase,
Intraday.
Yeah, exactly. So your big caps will start to congest first, and they'll start to turn down in the mids, and then smalls then, and then the bigs are always sort of basing first, all the leaders. So the big caps and the leaders are the ones that, tend to show sort of strength there or start to build. Then it goes through the process again. So I think this is just going to be not a major structural shift there for smalls. I think, inflation takes a long time here. People, this is the thing I don't understand with half the economists in this country here. They don't, obviously haven't read much about inflation in the past there. It's a really slow moving vehicle. It's, if we're riding a motorbike around town, we can just go anywhere. But if you're driving a semi-trailer there, to turn around the tight corner there, so that, or to do a full, 180 or 360 sort of turn, it could take you a long time to move a big vehicle like that back and forth, back and forth. That's inflation there. It takes a long time to basically change directions and go on, and slow things sort of down there. So it'll just take a while here. So we'll just get probably small caps will have a bit of a run here to maybe early next year. But that, I think that's why I say when you see everyone, small cap guys starting to celebrate that small caps is a place to be, that'll be time to get out.
Good indication.
So yeah, so you start to see a few already. Some of those buy now pay laters have had a good little run as well. So, but interesting there is that that's quite interesting as well. That's because that buy now pay laters, the actual market size has actually doubled. So people have started now to dip into their savings there. So savings are gone, and obviously we use credit cards next, and then we use the buy now pay later. So that what do you call it? Black Friday sales there, like the week or two up to that, the buy now pay later guys were all reporting really, really good business, really strong business there. So they've had a little run there, which is obviously good for them. I still wouldn't be buying and investing in it because I think there's so much overhead supply, for weeks of, like those stocks are still way underwater there. So there'll still be plenty of sellers there looking to sort of exit into any strength there. But it does highlight the cycle in terms of sort of, we're pretty buoyant here with interest rates getting higher, period of that. And then we've had a lot of, central bank handouts here. Some point the money runs out there. So it was just interesting to see that buy now, pay later, the market really kick on the last month there. So people are dipping into that. And so that might be, so I think you're seeing Canada, New Zealand sort of, quite softness in there, in those economies. So where we haven't had it here yet. So that might be around the corner for us. So just put it all in context there. But I guess, overall, I think the market looks pretty good here for the next, sort of 3 or 4 weeks. But yeah, I think there'll be some good signs there ahead here, which should invoke some caution there for next year.
Well, as you say that about the small mid caps, doesn't mean you won't take up the trading opportunities if they present themselves. So we can probably look through some of the ones that you've surfaced so far in the market. You've just talked about what we saw with Life 360 and some other larger growth companies. A2 Milk was definitely a great success story and huge movement, but it has pulled back significantly. You've highlighted the false break here. Is this the type of movement that you'd want to be seeing off a false break? Are you happy with what's been happening in the last few weeks for A2 Milk?
I do actually. Yeah, I do. Actually, I do like this one here because it sort of had pretty good volume at the low. Sort of pulled back a lot of volume. Had another little surge on some volume. Pulled back here, a lot of volume. So starting to see a few volume lines go through the stock as well now. So they're starting to build here on the daily there. So if you look at the daily chart, they've got a bit of a VCP, a little mini cup and handle, you might sort of say, but shorter term there, but just starting to build quite nicely. And it's a name that everyone's forgotten. So no one's talking about A2 Milk as well, which is usually a good sign too. So the ones everyone's talking about, they're the ones you be careful of. But yeah, quite like this here. This fact has come back, big retest, a long time, so just seen some pretty good recovery. I think Coda was sort of one that I saw a while back that came back and retested the low, went all quiet there, and then they're starting to build, slowly and then recover there. So, it's definitely one to keep an eye on there. I quite like this A2 Milk there, just because I think the risk reward is pretty attractive there, Chris. If you're running a fairly tight sort of stock in there, not too much sort of risk there. But if this thing starts to recover and get going here, there's some big upside. So, just do like that there. maybe it's a stock that can kind of run counter to the market as well. So yeah.
Another one that you've looked at is Aussie Broadband. You've looked at this one before, so a bit of an update. It broke out, so sort of that basing movement broke out, bit of consolidation, broke out again, bit of consolidation, pulled back, but jumps all the way through. Let's go back to the chart. And bullish spacing.
Up in it.
Yeah. It's tightening up there, but I think, have you highlighted here bullish spacing? Is that what's going on here?
Yeah, so you got a bullish base, and we're sitting on top of that high there. So we've seen in the past sort of a month or two there that we've followed a few stocks that have had a bit of a pullback. I think Cettire was sort of one there, came back and sort of sat on the previous high or just sat above. And quite a few of those stocks that sort of on the weekly structure sat on top of the previous highs, they're the ones that have actually gone on to make new highs. So this looks pretty constructive there. Just probably want to go through that little B wave, go through the little break that was it? Probably just under $4 there. So I think it breaks above that little swing high there. That'll be a good indication there. But it's probably one to sort of watch out for a little, hopefully we might see a little VCP in here tighten up, Chris. So, interesting to be in that market as well is that in the past, I've made a mistake of sort of thinking, we're in the final, 2 or 3 weeks of the market reaching its peak. And I think, I better go light, don't trade some of the opportunities there. And there's been some outstanding opportunities there, which I was reluctant to trade there and just saw them all, power on, take off there. Because you're getting rotation with the market. Some sectors are sort of cooling off. Others are coming on there. So you actually get more opportunities now when the market's actually really buoyant like this. There's actually there'll be some really, really good opportunities here. So don't have that, in the past I've had that mindset, there's only a few weeks to go for the market might peak. But you'll find that maybe 2 or 3 weeks after the market peaks, it's still getting set up here. So the next probably 6 weeks here, we might see some of the best setups. So that's often happens sort of late cycle. You see that with like Metabini and stuff and David Ryan. They just they'll wait for the stocks to sort of recover and start to show a bit of strength and ingest. So once the 50-day moving averages is broken, they're out. Downtrend, they just sit there and wait. Once it starts to build again, then they'll not come back in again. So everyone thinks it's sort of too late here, but these are where the best setups actually occur here, and the market's already had a pretty good run and looking pretty firm. So I think the next sort of 4 to 6 weeks should be pretty, should be some really good opportunities here. So potentially some of the best ones.
Well, that's one we'll watch with bullish spacing in ABB, Aussie Broadband. You're saying looking very robust. Another one you've put into this week's report is Ingenia Communities, INA, the ticker. Now, down at the bottom end of the chart, but what's quite exciting is you've pulled out the 0, 1, 2, 3. Got a whole video on that. We put the playlist to the side. But I know in the last couple of weeks, you've become more and more excited about this pattern. You've been trading for years now. Why and why INA? So why the pattern and what's INA showing with that pattern?
Yeah, so the pattern's interesting because like most, and there's a great example right in front of you of why this pattern is quite good is that you look at that low there, so most sort of counter trends will rally in 3 waves. They'll go to A, B, C, and then they go back into the downtrend. So there's your little A, B, C, and then we continue to trend down. And that's, sometimes they're smaller, that can be a little small consolidation, or they can be a big consolidation, right? But most counter trends are little 3-wave setups there. So once you start to get a sequence of high lows, so basically more than just your one high low, but your sort of second or third, then the whole thing is sort of starting to base here. And then that's when it's sort of, something's a bit more sort of built there. So even some of the stocks there, like I think ResMed and some stocks that I sort of bought here, seen there actually, if I was a bit more patient, if I waited for the second or third high low to sort of set up there, probably my entry is only marginally sort of, sort of worse off there by waiting here. But what it does is it just means there's a bit more base here sort of established there. So, but yeah, I mean, I think this looks pretty good here. We've also got that, that BCP sort of triangle sort of set up. This whole price action is tightening up here. So that's what we want to see here. So, I think the volume's pretty constructive as well. So that first rally off the first low was good volume, pull back on lighter volume. So some better volume sort of been seen at the lows here. Last couple of weeks there, we saw, good volume last week on that turn back up again. So just want to see this tighten up a little bit more here, but this looks pretty good here. When I look at the fundamentals there, Chris, though, I think forecasts to sort of grow 41% in 24 and 40% 25. So there's definitely pretty strong growth horizon there, which is what we want to see. We want to see these sort of these sort of best momentum stocks there are the ones with the best sort of earnings growth profile as well. So I think that looks quite good.
Well, lads, as you said, 0, 1, 2, 3, BCP, triangle, wedge, however you want to look at it, it's constructive in many different ways and the volume's supportive. So we'll watch that. And it's not the first time we've highlighted Aussie Broadband recently, looking well. So is Domino's Pizza. So Domino's, you talked about a little while ago. I remember on air and off air, you've talked about it for a while and said how this congestion's looking nice. And clearly it's popped quite recently. Would this be the target that you're looking for?
Yes, there's a couple of VCPs in there. There's obviously got a big rectangle there, but the main thing there is the whole thing sort of was, towards the end there, sort of started to tighten up, and then we've broken out the upside there. It took a bit longer than I thought it would, but yeah, it's a nice little breakout there. And oftentimes when those sort of rectangles there, when they're caught in the ranges there, you're looking at the same sort of move there. So I'd say at least 80% of that range I use as a minimum target. Oftentimes I'll go the full 100%, but I'd say 80% at least there, at minimum there. So that's probably up around $60, $61 is probably a good target there. Just done a lot of building there, Chris. That's a really, really sort of tight, sideways orientation and breakout as well. So we saw like some of the sisters come in as well. So Collins Food is sort of one that we highlighted previously, I think around $9, and then got to about over $11. So telling you that the sector is pretty buoyant as well. So that always gives you a bit more confidence when the stocks in the same sector are looking pretty strong as well.
Definitely. Yeah, that's definitely a vote of confidence when we're picking shares out of the market and looking for bases and similar bases and patterns. So Domino's Pizza moving well. It has sister support. Domain Holdings Group, different kind of company and different setup. So you've got ABC here. So it's ABC. Is that the ABC that you're looking at?
It's actually more negative than I try and normally look at there. And it was just interesting because REA has kind of gone to new highs and Domain has gone to new lows. So they're really, those sort of, they are sister companies there. That's sort of, they're almost really identical in nature there. People tend to use both of them. I know REA is probably seen as the better company there just from a metric point of view, but very, very similar. But interesting that they're both going the opposite ways there. So it looked pretty negative, that sort of chart there. But when I had a closer delve into the stock there, I noticed that that when it's sort of running down over having a pullback there, that kind of pullback, it often exhausts on really big volume there, like the big volume spikes will often sort of mark the low. So all the lows that have sort of come in for the last sort of couple of years have all come in on these sort of volume spikes there. And then they sort of tend to recover there. So I just sort of noticed there's a little bit of a descending sort of wedge in there. Has come back in sort of 5 ways. It's probably not that constructive. Come back a little deeper than you think there, but this is probably just one to keep an eye on here, just because it's really underperformed there. Probably another line of sort of growth names, which is a little bit weak there. But that's often how they've ended. Is what happened there last week. So that big sort of downward move there, sort of 5 waves and a bit of a spike here. So just probably want to sort of watch this for the next week or two there, see if it can't sort of build something there. But that's probably more of an early pick rather than a strong pick there. I think you still got to watch this one for a bit longer before you go in there, just because it is definitely underperforming here.
Okay, well, going from an underperforming one, let's look through the charts and we find you've got IGO, which is one you had mentioned last week and a bit before. This has come down, and you did note that it was not the prettiest of charts, but there was a bit of a reason for it, and you were looking for a bit of a consolidation area here and possible reversal. How would you describe what's happening now?
Yeah, so look, it's similar sort of setup to ResMed actually, really. So the same sort of timing there, but I just noticed that like a lot of commodity stocks follow sort of commodity-based cycles there. So the 144 cycle. So we just had a perfect, pretty deep pullback there. Come back to a bit of a fib level. Started to see volume, started to see a lot of the sister companies all come back to all sort of, so you had all those companies, S32, AKE, PLS, they were all bouncing off or coming really back to sort of key fib levels and old sort of support zones. And we saw elevated volume too. So that's always a bit of the one thing I talk about volume constantly, but you've got to watch for those sort of larger volume activities in the stocks there, because they're big volumes. They tend to come in one or two places. They're either, tops there, which is, distribution taking place, or they come in near the lows there and accumulation take place. So when you start to see the volume really pick up there, that should give you a hint that the buyers are starting to step in. It doesn't mean you're at the low. Sometimes it can take a few weeks, or it might even take a month before you see the low there. But it does tell you that the market is starting to see, starting to sort of step in front of this, starting to accumulate stock there. So that's when you sort of got to start looking at a little bit more shorter term frames to sort of see if there's anything sort of building there, and any key levels and any key timings and stuff there. So we just happen to have them all set up for IGO. Had a few of them set up for S32, and a lot of the other stocks were doing similar as well. So they all look pretty good levels here. They all had a pretty strong bounce there. It had some pretty good volumes coming as well. So main thing there is when you sort of see a low coming, Chris, a lot of them are just hanging off the low pretty hard. Like a PLS, you saw how big that just rallied. Like in 4 days, it's just gone bang, bang, bang. And it'll nestle back again, give you maybe one chance to sort of pull back and come back in again and build again. But they should start to build here now. But they really tend to sort of bounce pretty hard off the lows there once they're sort of in. So I think these are the stocks that I think potentially could run a bit further. So while the market might peak early next year, these stocks might continue to run counter to the market as well. So just because I think they've come back pretty deep there, and potentially I think there's some greater upside there. And commodities will do their own thing too while inflation's pretty high. So they're definitely stocks that could do well, in this still high inflationary environment there. I know inflation's heading down here, but trust me, we're still talking about inflation 6 months from now. It takes a long time to go away. Everyone thinks it's done and dusted, but history says that's very presumptuous. And I think 80% of the time it's just doesn't disappear sort of straight away.
Rears its head and comes back for another fight.
It'll recur around, So it's so we'll see.
Well, there we go. We've got some growth companies, some ones that are on their lows, some volume to look at, some ones who have on the watch list, and then also some materials, mining, commodities companies that can definitely run and dance to the beat of their own drum with the market's doing something completely different. So a lot to watch and look out into it. As we sit at the 19th of December, coming into Christmas around the corner.
Well, there was one last one there, Chris, too, the Lynas, the last chart there was just similar to these other ones. Yeah. So I feel like a PLS there has sort of washed out onto a new low and a little pulse break there. I think Patriot Metals, PMT as well, did it almost identical sort of setup. So a lot of the sister companies are all doing similar. They're all sort of congesting, retested the old low and reversed there. Some good volume sort of finally stepped in there. So potentially some constructive sides for that lithium there. Look at the volume, sort of that volume increase there, volume spike at the low there. Tells you there's sort of some entry in there. So there's, potentially lithium's been on the nose here most of this year there. This might sort of start building again here. So some good signs there as well.
Well, that's, more commodities to look at, different minerals, commodities themselves, so they can run similar or different paces, and definitely that. So coming back to sort of round out towards the year end, are you still staying relatively invested coming into the Christmas New Year period, and then maybe the first week of January you're starting to lighten the load? Is that sort of the summary, or is little tweaks on that?
Yeah, I think we're sort of really trying to stay long here until at least the first week of January. I think so. Just got to follow that sort of growth. Just got to follow that market pattern. Just keep that in mind. It's not the be all and end all. Some things will deviate out of cycle, but predominantly, if we follow the inflation cycle, 90% of that has followed, the same cycle. And we've seen the cycles before. 90% will sort of, will fall on the line here. There'll always be the odd stock in there that'll be, a little different, but it's all the same, Chris, here. So it's just got to get used to those sort of cycles. And hopefully, as we get older, we get a little bit smarter, and we learn when to hang on a little bit longer, and when to sort of get out of it early, things like that. So it's just, but I think it still looks pretty buoyant here. So some good signs into the end of the year. Tend to be lightly traded, sort of Christmas through New Year's as well. So a lot of people away. So for a lot of, typically sort of why that period's pretty good is a lot of sort of, large money managers on holidays. So they're the ones who predominantly do the most amount of selling. So, if the bigger guys aren't around on holidays there. Yeah. So you just might sort of just see them just sort of grind there. I've done it sort of been in the game 20 years. That's always the safest time to take a holiday. Because that's sort of markets, go up 9 times out of 10 throughout that period. So, and there's usually not too much activity as well. So it might be lightly traded, just a bit of a grind, slightly higher here. Nothing, I think there's only been maybe one dramatic sort of Christmas period in the last 20 years that I remember where we actually went the other way. So it can happen. Markets can go the other way.
Right.
But it's definitely, the probability says this is normally a pretty buoyant period. So, yeah.
Well, to that, we'll take the lead into wrapping this up, saying thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
The right-hand side, there's those strategies and research we talked about: inflation, volatility, contraction pattern 0, 1, 2, 3. And also, Gary's looked at a lot of growth company, momentum leaders, and what we call Launchpad. There's a whole playlist of those Friday reports. And on the left is his Twitter or his X handle if you want to follow Gary there.